Hey, founders, Kirk Michie again. Hey, we're working our way down the funnel. So we started broad with questions like, how do you figure out valuation? What are the multiples in your area? How do you kind of vet and prep for going to market? Sort of all the things you would want to do to decide if you're going to go to the market. Then the middle of the funnel were questions about whether you should hire an investment banker. What does the process look like? How long does it take? How do you find your buyer? Now we're down to the bottom part of the funnel, which is to say that you've decided to go, but there are certain terms or parts of the process that you still would like to be more sure about before you actually retain your M&A lawyer or retain a business broker or investment banker or decide to go it on your own. So a question that comes up a lot, a term that gets frequently used incorrectly, is LOI, or letter of intent. So oftentimes somebody will discuss with you the value of your business in what's called an indication of interest. That's a less formal way of kind of making an offer, or at least starting a dialogue. So a letter of intent usually has a few pieces to it. One, it acknowledges some level of confidentiality. Two, it usually talks about valuation, or at least what materials might be needed to validate the price that the buyer might pay for the business. And three, it usually includes a period of time where the buyer is asking for exclusivity. That's the period of time where they seek to use their outside resources and their internal resources to review your financials, look at all your documents, evaluate who your customers are, and try and make sure that it is the business they want to buy. If it's a private equity firm, do they think they can add it to something they already own or build off of it? If it's a strategic buyer, is it a good fit with them internally? Does it build out their geography or product set or service adjacency? And so that due diligence period is usually the period of time under which, once you have signed the letter of intent that says, I will sell my business to you on these terms, and they have co-signed it saying, we want to buy your business under these terms, and we expect you to talk to nobody else for the 90 or 120 or however many days the exclusivity in the agreement is specified for. Then the other thing that's important to remember about that is, one, it's not a purchase contract, right? So it's not binding. There are binding portions of it, like if it mentions confidentiality or it speaks to exclusivity, you do have to honor those things. You can't agree to exclusivity based on a letter of intent and keep a side conversation going with another buyer. That's a violation of the LOI. That's an actionable item. They could sue you for that. What you can do, though, is kind of remember that it is non-binding. So if you get the wrong vibe from them, you can definitely say, listen, I don't want to sell my company to you, so I would ask you to terminate the letter of intent. I would ask you to recognize the idea that I'm not going to sell to you, I'm not going to change my mind. And so even though there's 45 days to go on this exclusivity period in the LOI, if you don't release me from the LOI, I'm not going to be able to talk to anybody. You're going to freeze me out in the marketplace for a month and a half. None of us wants that to happen. Why don't you move on? I'll move on. So look, it's a more complicated conversation around what might happen during that period of time, but the critical pieces are to recognize that the letter of intent is somewhat formal. It does specify a price. It oftentimes will specify how they'll finance the deal. It definitely will talk about how long they need to complete the deal and what their expectations are for additional information. But remember on your side that even when you sign it, and don't ever sign an LOI unless you get some counsel, definitely M&A counsel is best. Certainly an investment banker's counsel on this can be really helpful to figure out market terms. But so don't sign the LOI until you get those things. And then the other piece of it is to kind of recognize that it didn't handcuff you to selling your business to this buyer. Might freeze you out from talking to others for a little while, but it doesn't mean that you're definitely going down the path. There are more documents that need to change hands and more tripwires that need to get flipped before your business gets sold. So that's it. Talk to you soon about other elements of the bottom of the funnel.